Coming up on Business Incorporated today, World Bank approves $380 million to facilitate regional trade in Malawi and Mozambique. Kenya launches digital land transaction platform. And Ghana's Minister of Energy says power fluctuations will soon be a thing of the past. Hello and welcome to the program. I'm Ini John Mekwa. We begin midweek's show with intraday market numbers, which were mostly negative on the African continent. On the index in Nigeria was positive 0.08%. On the flip side, the JSE was marginally lower by 0.06%, while the EJX30 in Egypt shaved off 1.02%. Kenya ended Tuesday's session positive. In the Middle East, it was a similar picture where major markets were mostly negative. In the UAE, the Abu Dhabi index lost the most by 0.60%, while Dubai's index declined 0.38%. Elsewhere in the region, the Qatari index lost 0.49%. Only the market in Saudi Arabia advanced by 0.86%. And in Europe, stocks were slightly lower this morning as global markets await comments from the U.S. Federal Reserve. Conrad Wilson is standing by at the Frankfurt Stock Exchange to bring us up to speed with developments from that space. Hello, Conrad. Good afternoon and welcome.
Hello, Ini. Thanks for having me back. It's great to be on Nigerian television again.
Great to have you. Well, Deutsche Bank has recorded its best quarterly profit in 7 years as it earned nearly 910 million euros thanks to a strong performance in its investment banking division. Does it come as a surprise?
Yes, it does, because, you know, we had the Archegos scandal, this hedge fund in America go bust, which really caused a lot of damage to a lot of investment banks, most of them Credit Suisse, UBS, also affected. Morgan Stanley was affected. So we had a couple of banks really suffering from this. A lot of people on the markets expected a negative surprise today from Deutsche Bank. It didn't come up. There was no negative surprise from Deutsche Bank. On the contrary, you mentioned the very strong earnings, this record high for a first quarter. That's really positive. Also, Deutsche Bank says that it is lowering the risk provisions this year, that it's facing a solid, profitable year, a very nice net income at the end of the year. So, of course, there are still a couple of, open questions around Deutsche Bank. For example, the supervisory board, where one member had to leave because he was too close to this scandal company Wirecard. So a lot of shuffling still has to happen at Deutsche Bank, but an end is in sight.
So many more companies have reported earnings, companies like Alphabet, Reckitt, and how are their performances?
They're doing very well, and that's one reason why the stock market here today is trading a little bit on the higher side, on the higher end of the scale. We had, you mentioned Alphabet, Google's parent company, reporting a strong increase in revenue of 34%, more than $55 billion in revenue. Reckitt, you mentioned Kion, that's a maker of vehicles that you need on construction sites. Electrolux, Sony, also strong increases of their earnings, which has a lot to do with so many people staying at home, vacuuming their floors and watching television.
Well, Germany's GDP in the second quarter is expected to be plus 2%. Is this enough? And what more economic indicators are worth mentioning today?
Well, most economists, most people on the markets would have liked to see a stronger number, at least in particular as this first quarter was so dismal, 1.5% of a contraction of our economy. In light of this, a 2% increase in the current quarter, that would even be positive news, I suppose. But we can see it in all different parts of Germany's economy that there is a recovery happening. We've seen more jobs, more building permits, so the construction sector can continue to boom. German companies are really planning to invest and to hire, and I think that is one of the important pieces of news this Wednesday.
Yeah, very important in the world today. Thank you so much, Conrad, for taking time out to give us an update from Europe. Well, we'll now take a trip to London to get updates, especially on Prime Minister Boris Johnson's Downing Street flat refurbishment. Hello, Juliana. Good afternoon.
Good afternoon, Innie.
Yeah, well, like you said, this story I don't think will go away in a long time. The controversy around the funding of Prime Minister, and now the Electoral Commission has launched a formal investigation. Do we have any information from that finding?
Not yet, because the funding watchdog only announced that it would be making or transitioning these allegations into an informal investigation, a formal investigation a couple of hours ago. But I can tell you that the Prime Minister's in trouble, Boris Johnson is in trouble, and there are a series of allegations in two major stories. This all started off with the David Cameron, former Tory Prime Minister, Green Seal scandal. He was formally cleared, but of course he was accused of sleaze by using his political clout to gain access to the heart of Number 10. He was texting the Chancellor of the Exchequer, Rishi Sunak, asking him to push Treasury officials to try and get more funding for the now collapsed firm that he was speaking to. Put that aside, there are now 9 different investigations ongoing into Tory sleaze and Tory scandal. Now this has come back to Boris Johnson, and his former chief advisor, Dominic Cummings, has literally stabbed the Prime Minister in the back. He's written a 1,000-word blog post where he has accused the Prime Minister of a series of failings, one of them being about who funded this alleged £200,000 refurbishment of the flat above 10 Downing Street, which is officially number 11 Downing Street, where the Prime Minister does live with his fiancée and baby, Carrie Simons. It's a lot of money, £200,000, especially if you consider that the Prime Minister is actually given £30,000 per year for refurbishments. Theresa May was in there just recently, and apparently it was, full of John Lewis furnishings that wasn't to the taste of the Prime Minister's fiancé. Who paid for this renovation is the cause of concern at the moment. Boris Johnson has just finished a very heated Prime Minister's questions where he was up against the opposition Labour leader, Sir Keir Starmer, formerly a chief prosecutor, so you can imagine how that to and fro went. Yes. Boris Johnson has denied the fact that he took a Tory donor money to pay for that. He says he paid for it himself. That's up to question. I know I don't have a lot of time, but another serious allegation that the Prime Minister is facing, very, very serious, is that during a cabinet discussion in late October last year, he was quoted as saying, "Let the bodies pile up high in their thousands." And this was because he felt forced or coerced into going into a second national lockdown, which he didn't want to do. And he's apparently said that. Of course, he's completely denied that. Lots of cabinet ministers have gone on the airwaves denying that the Prime Minister has said that. Serious, pretty senior media houses in the UK say they do have people who confirmed the Prime Minister has said that, but they're scared to go on record. So yes, to wrap it up very quickly, Innie, the Prime Minister is in trouble, and potentially, this could rock his once unquestionable tenure.
Wow. A lot of questions for the Prime Minister there. Well, the European Parliament has ratified the post-Brexit EU-UK trade deal to ensure that tariff and quota-free trade continues. This is some good news, right?
It is some good news, and I'm sure for the Prime Minister, he would have wanted this to dominate the headlines today. It hasn't.
Yes, you can say that
And though
again.
it should, because of course, this has been a long-running battle, 5 years in the making, and then we've got that very kind of skeleton post-Brexit trade deal on Christmas Eve. It's provisionally been in place since the beginning of January, but finally today, MEPs overwhelmingly ratified it. 660 MEPs in favour, 5 against, 32 abstained. It does mean that finally they can work in this new relationship together. It hasn't been an easy post-Brexit trade deal. First of all, we had that pretty tense COVID battle over vaccines and whether or not the European Parliament would block vaccines coming into the UK because, of course, they fell very desperately behind the vaccination drive race. And then, of course, we've had that Northern Ireland protocol. There have been issues on the border, which is in the middle of the Irish Sea. Britain have effectively allowed some of the old ways of doing things to continue, despite the fact that this goes against the deal. The European Parliament really are not happy with that. And then if we look at trade, we've discussed it on this programme several times, the fact that trade, exports and imports going in and out of the English Channel are completely down because of bureaucracy. But at least this hurdle is over. The Prime Minister has described it as the final step in a long journey.
So are the markets reacting to this deal?
Not really. It hasn't really touched market sentiment today. A lot of people are looking at what's going to be happening across the shores with the Federal Reserve. We're expecting to hear an announcement by Jerome Powell, the Fed Reserve Chair, any time now. And as you were discussing in Frankfurt, there's been a flurry of trading updates. It is update season for banks. Yesterday, it was the turn of HSBC. Today, it's Lloyds. Lloyds showing that they made profits of £1.9 billion in Q1 of this year. That compares to profits of just £111 million at the same period last year. This is because, of course, banks put aside so much credit impairment because they did think that a lot of people would bail on paying back their money. They haven't done that due to government measures, which is why their profits are so high. So if we have a closer look at the numbers, the all share is up 0.24%. The FTSE 100 is up by 0.17%, and the FTSE 250 is up by 0.40% at intraday. In the currencies market, the British pound is down on the US dollar by 0.21%. Unchanged against the euro, and up on the Japanese yen slightly by 0.01%. Innie.
All right, thank you so much, Juliana, and enjoy the rest of the day. Talk to you tomorrow.
Thank you.
So we move away from London now. We go to Asia, where shares in the Pacific were mixed today after a slew of economic data. In Japan, the Nikkei 225 rose 0.21% to close at 29,053.97, while the Topix index gained 0.29% to finish its trading day at 1,909.06. The S&P AS 200 in Australia advanced 0.44% to end the trading day at 7,064.70. Mainland Chinese stocks closed higher as the Shanghai Composite advanced 0.42% to 3,457.07. While the Shenzhen component gained 0.942% to 14,398.38. Hong Kong's Hang Seng Index rose 0.45% to close at 29,071.34, while South Korea's Kospi slipped to 1.06% on the day to 3,181.47. MCSI's broadest index of Asia-Pacific shares outside Japan stood little changed. And investor sentiment in the United States were mixed. Futures tied to the Dow Jones were down 0.11%, while that of Nasdaq declined 0.18%. Only the S&P 500 futures were positive by 0.09%. The Federal Reserve kicked off its two-day policy meeting yesterday. The central bank is not expected to take any action, but economists expected to defend its policy to let inflation run hot. We'll take a break now. When we come back, we'll go to the African continent. Welcome back. We're now in South Africa, where the President Ramaphosa, addressed the nation on the Freedom Day speech. What were the major highlights of the speech, and how are economists making sense of it? Trinity Nkube, an economist in South Africa, joins us now for more. Hello, Trinity. Good afternoon.
Hello, it's great to be here again.
Thank you. Well, yesterday, the president addressed the nation during the Freedom Day celebrations. He spoke on different challenges, including unemployment and poverty. What stood out the most for you regarding these issues?
I think this time around, there's a different tone around who's responsible for getting these problems around, getting around these problems. I think the key message here is the answer is within us. We should search within the country to see how we can get out of these issues. These have been long-running issues for decades. So there is a recognition that we need to be able to find our own solutions and not wait for the outside world to fix things for us.
The president also spoke on the future plans for the country. What did he say, and are those plans realistic?
Well, we're in a very tough situation. But again, as you know how I approach things, I'm very optimistic. I think there's a bit of taking of a responsibility among us. So I'm very optimistic in terms of if everybody comes to the table. Yes, some of the plans are overambitious if one is looking from the outside. But I think it's always been a lack of political willingness. So there is a bit of willingness among people that we can't keep on doing things this way. So so let's see how it pans out, and that's if everybody comes to the table.
So let's talk about inflation now. Data from Statistics South Africa shows that the figure rose to 3.2% in March from 2.9% in February. How hard is this biting South Africans?
I wouldn't panic as yet. It's within the 3 to 6% inflation target that is used by the central bank. However, we must pay attention to how inflation hits the lower income families. So we're looking at a slight change in basics like food items and so forth, even transport. We're looking at a liter of petrol going for over 17 rand, which is unheard of. So of course, this is a very tough time for the lower income and middle income families who are really struggling to make ends meet. So at the moment, it doesn't impact us. Over the long term, we'll see how this all play out in the whole inflationary process. But at the end of the day, yes, it's tough times for everyone, particularly the lower to middle income people.
Okay, so what were the drivers of this inflation figure?
So, as you may think about, the whole inflationary process is triggered by oil prices. So the petrol price has gone up after a very long time. During the first lockdown, petrol, I think, was under 14 rand a liter. So that 3 rand jump to 17 rand something has really triggered the inflationary process, because everything within the production cycle pretty much goes up. By the time it gets to the end consumer, we are looking at almost everything on the shelf going up in prices. And at some administered prices, you would find some of the producers actually go on and put up prices when things calm down a little bit, even then the petrol goes down. You see, they don't adjust the prices down, which is very suspect. But this is what we're dealing with. When looking at producers, they rush to obviously put up prices. So that whole inflationary process keeps going up. And of course, it started with the oil.
Okay, so the month of April is coming to an end. The May is upon us. What's your outlook for the economy for the month of May?
Looking at everything, I mean, the economy has kind of opened up a little bit. So there's a bit of an improvement on the economic outlook. We are not out of the woods yet, because for us to get to the point where we were before the lockdown, I don't think we'll ever be able to get there, although we were already in a bad state. So when we're looking at where we're going, we're looking at one day at a time. Things are improving. But for us to get to pre-COVID economic climate, it's going to take quite a lot of work.
So what's the past situation there, just before we let you go? What's the past situation now in South Africa?
At the moment, it's stable. Here we look at everything week by week or day by day. It could be a great day now, and then all of a sudden, we're back to zero, to square one. So
Well,
yes, I mean, we will hope that things will be stable for at least the next couple of weeks as we stop into winter.
well, we sure hope with you that it gets better. Thank you so much, Trinity Nkube, an economist in South Africa, for sharing your thoughts with us on the program.
Thank you again for having me.
Yeah. So moving on now, the World Bank has approved $380 million in financing from the International Development Association to support Malawi and Mozambique increase regional trade coordination, reduce trade costs and time, develop regional value chains, and improve access to infrastructure. The new Southern Africa Trade and Connectivity Project will benefit both countries and local communities through investments that will facilitate trade, strengthen regional coordination, and increase diversified economic opportunities, connecting Mozambique to Malawi and connecting Mozambique to South Africa. The north and central parts of Mozambique and central and southern parts of Malawi, where poverty levels are the highest, and the region near Ponta do Ouro will benefit most. The project also ensures that youth and women are well represented among its beneficiaries. And in Kenya, the President Uhuru Kenyatta has unveiled Adisasa, a digital land information management system marking the end of manual land transactions in the capital, Nairobi. According to the President, the full rollout of the program will facilitate the resolution of historical land disputes and guarantee the security and sanctity of land title deeds. The head of state further pointed out that the new digital platform will benefit all landowners and potential landowners by providing accurate information required to support the commercialization of land in a convenient and timely manner. However, landowners who might not be able to access their records are advised to be patient as the Ministry of Lands continues to populate the digital platform. And in West Africa, the Minister of Energy in Ghana has asked Ghanaians to be patient as the government is investing financial resources towards the upgrading of the power operating system in the country. That he said, the minister, that the investments will ensure efficient and reliable power supply to both domestic and commercial power consumers to improve their businesses. In recent months, Ghana has witnessed frequent power cuts, especially parts of the national capital, Accra, resulting in public outcry. A section of the public has accused government of not telling Ghanaians the truth about the power situation and suspected that government has no money to buy fuel for the power plants. We'll give you oil now, and oil prices dropped in early trade today, pairing overnight gains with soaring COVID-19 cases in India and a bigger than expected build in U.S. crude stocks, offsetting confidence shown by OPEC and its allies in a solid recovery in global fuel demand. Brent crude futures fell 0.4% to $66.16 a barrel, while U.S. West Texas Intermediate crude futures also fell 0.4% to $62.71 a barrel after gaining 1.7% yesterday. The American Petroleum Institute Industry reported crude stocks rose by 4.319 million barrels, which was a much bigger build than analysts in the Reuters poll had estimated. The more closely watched weekly inventory data from the U.S. Energy Information is due later on today. And that's it on the program today. Thank you so much for watching. I'm Ini John Mekwa.